Welcome back to Why Should We Care About African Data Centers, the podcast where we tackle the big questions shaping the industry. I'm your host, Ville Waklin, and my guest today is James Hutton Mills, the CEO of Temple Energy Services. In this episode, we talk about the global AI investment boom, where the billions in data center capex are actually going, and what it means for Africa's digital future. Welcome to the show, James.
Hi, good morning.
How are you doing?
Not too bad, thanks. Not too bad.
When did you arrive to beautiful Cape Town?
Arrived late last night for this huge conference, which is of the three big data center conferences in Africa. This is the main one. I think we were talking about 20,000 people being here, which is obviously a very, very large conference anywhere in the world. So I think it signifies the continued interest in the data center industry and in Africa, which is a big positive.
It does. It is. Are you a conference guy? Do you like the conferences, or is it something that you think, okay, I have to be there, but...
Well, I think that you have to meet people, right? We're not robots yet. And, ultimately you have to engage. And the best way to do that is to find venues where you're going to have a high concentration of people who are going to be focused on the same thing that you are. So I think conferences are very useful, and hopefully this will be a good one.
Yeah, I'm sure it will. By the way, what's your favorite place in Africa?
Well, I'm Ghanaian, so I'm biased.
Where in Ghana? More specific.
I live in, I was born in Accra, the capital. So I'm going to obviously be biased and say Accra is the best place in Africa.
Okay, fair enough. So, let's start with the big picture. The world is in the middle of a massive AI build-out. Do you know how much capex is actually being deployed globally right now in the AI infrastructure?
Yeah. Okay. So the numbers are vast. And if you were to sort of look through the numbers, you'd see that in terms of global capex for AI in 2024, the figure was 250 billion. This year, 2025, it's going to be approximately 350 billion. And then the forecast for next year, 2026, is that it will be 400 billion. And that is predominantly focused on data centers. So that's both GPUs as well as the actual facilities. So that's $1 trillion basically over 3 years. So absolutely huge figures.
Absolutely huge. And geographically, how is that capex being distributed?
So broadly speaking, from various sources, of that 1 trillion, about 60 to 65% is going into the US market, about 20 to 25% is going into the Middle East, both UAE, Saudi, so forth. And then of the balance of, let's call it 15%, approximately 5 to 10% is going into Europe, which means that Africa, Latin America, and non-China are scrapping around for the final 5-odd%. So there's a very high concentration of that capex going into the US market. So in terms of who is deploying that capex, just to be clear with those aggregated figures, we're talking mostly about the hyperscalers. So that's Microsoft, that's Amazon, that's Google, that's Oracle, Meta, and so forth. So they are the main drivers of that capex.
And for what? What are they building?
Okay, well, I mean, it's predominantly data centers, obviously. Yeah. But, I think just to back up in terms of trying to give you a little bit of logic there, remember these companies are essentially listed entities. And because they're listed entities, the reason why I think they're focusing on the US is that they have to justify that capex spend. And it's much easier for them to justify that capex spend on revenues that can be delivered in the near term. So the reason why the majority of that capex is going into the US market is because A, the US market is a much more tech savvy market. B, the GDP per capita in the US is higher than anywhere else in the world. And as a result of both of those facts, it is much easier for them to deliver revenues for all the capex that they're spending, because the numbers are so vast, they have to justify that capex. And actually, you are beginning to see that in their numbers. So, you look at the most recent quarterly figures from Microsoft, from Alphabet that owns Google and Amazon and so forth. You are seeing some very, very strong year-on-year growth. You're seeing the cloud market continuing to grow by 20 to 30%. Google starts from a slightly lower base in terms of having slightly lower market share relative to Amazon and Microsoft. So their cloud business has been growing by 30 odd %, but you're still seeing Amazon and Microsoft seeing very strong growth of 20 to 25% in their cloud businesses. So the fact is although there's a lot of capex that's going into the world in terms of data center capex, there is strong revenue growth. But as I say, at the moment, the focus is a bit more on the US market.
Yeah, but it's the huge wave of capex is going to the AI infrastructure. Who are the AI players?
Well, the AI players are still the hyperscalers. The hyperscalers, to the extent that they believe in the medium term and the long term benefits of AI, whether we're talking about cloud computing, whether we're talking about consumer services. It may be the case that for example, Meta has a core revenue base that's fundamentally based on advertising. By utilizing the most advanced AI technology, it is actually demonstrating that it can deliver higher revenues. It can force people to spend a little bit more money on advertising because it's increasing, whether it's eyeballs coming to Instagram, eyeballs coming to Facebook, eyeballs coming to WhatsApp, and also utilizing those eyeballs better, having a better idea of what we care about. So both from the consumer perspective and from the enterprise perspective, the spend on AI is there to try and make a return on invested capital. But fundamentally, I think where people are getting a little bit concerned is that the numbers just seem so vast, right? But that is because, I think we could strongly argue that we are experiencing a paradigm shift. This is a new world order where technology is changing significantly, and this is going to change our lives in lots of different ways. So that's why it's happening.
Yeah, and you said about $1 trillion over the next,
over 3 years, 2024, 2025, and 2026.
Does that sound like, is there a risk that we are seeing a bubble here?
Well, so there's sort of two aspects to your question there. Is there a bubble in the capex, or is there a bubble in the industry? I think that you are going to continue to see high capex for a while. So, let's say the figure is $400 billion in 2026. I wouldn't see it falling off a cliff in 2027. I don't think they're going to, that capex is going to fall off a cliff, because a lot of these companies are focused on being the first to deliver what's described as AGI, or super intelligence. So until that is demonstrated, the Microsofts, the Amazons, the Googles, as well as the new AI players like Anthropic and OpenAI and Grok, are all going to be spending money to win the arms race to deliver super intelligence. So is it a bubble in the sense that there will be a cliff edge to the capex post 2026? I don't think so. Are there other reasons why people are increasingly concerned it's a bit of a bubble? Potentially. I mean, I think the things that might make one nervous are certainly some of the stock market multiples are getting frothy, right? There's companies like, for for example, that, not just me, but other people would highlight Palantir, for example, which is a US software company. You've got a PE multiple of over 200 times for a company with significant market cap, and I think it's 100 times revenues as well. So multiples like that are scary, right? Also, I think the other thing that people don't like is that recently you've seen what looks to be some circular investments. So, for example, NVIDIA is investing $100 billion into OpenAI. With that $100 billion, OpenAI is going to be buying NVIDIA chips. NVIDIA's also got an agreement with AMD to do much the same. And, there is some concern, and also with Oracle, there is some concern that it's all a bit circular. And is that going to lead to some sort of significant issue? On the other hand, as I think I highlighted, earlier, having seen the TMT bubble as an analyst once upon a time, 20 to 25 years ago, I think the 2 or 3 differences I would highlight are that these companies have got very strong balance sheets. Okay, and when I say these companies, I mean predominantly the large listed companies like Microsoft and Alphabet, which owns Google, and Meta and so forth. 20 to 25 years ago, when we had the TMT bubble, a lot of those companies did not have balance sheets, did not have, it wasn't so much they didn't have any access to capital markets, but these companies today generate a lot of cash. These companies today have very strong balance sheets, they have access to debt markets, and they're only now starting to use their balance sheets. They have literally been using cash resources to date. So point number one, in terms of offsetting some of the criticisms about an AI bubble, these companies have got very strong balance sheets. Point number two, I think that the other point I would make is, I sort of referenced it earlier, you are seeing strong revenue growth, whether you're talking about the cloud market, whether you're talking about advertising for companies like Google or indeed for Meta, the money that is being spent on this capex, at this point in time, there is some demonstrative revenue growth as well. So I think on a 3 to 5 year basis, we'll obviously have a better idea if there's any overbuild in terms of data center capex. But as I think, you would highlight, there's certain parts of the world where there's very limited capex going in. And, one of those parts of the world is Africa. So I think that basically what you have here is intelligent companies with strong balance sheets who see a huge market opportunity. They all have their specific areas of expertise. They are therefore deploying their capital intelligently. But there are some concerns that it's all moving very fast. But sometimes that is exactly what happens when you have a paradigm shift.
Yeah. Okay, so I think you touched on this topic already. So we now know that a lot of money is being poured to this infrastructure, most of that going to the US, then surprisingly to me actually to Middle East, and only after that to Europe. Maybe we can get back to that and you can explain why Middle East and only after that EU. Actually, let's talk about it now and then go to Africa. So why is that?
I think what I would say is that 20 to 25% that I referenced, that capital is coming from the Middle East itself, right? So it's not necessarily capital coming from just the hyperscalers. Yeah. So, you have countries like Saudi Arabia and UAE who are trying to transition away from oil economies, right? And because they're trying to do that transition, they have identified AI as a critical and strategic sector. And so they are using their capital to try and be part of that discussion. And it's big, right? So, they're going to be spending $200 to $250 billion. You will recall that Donald Trump had those trips over to the Middle East, took his, key people with him, whether that's Sam Altman, whether that's Chung and so forth. And, they made lots of big announcements. But the point I'm trying to make is that the Middle Eastern governments themselves are also contributing to that capex. And, it's perhaps easier for those governments to make those significant capex deployments relative to European countries. So the governments themselves are making those decisions, whereas in Europe, it's still more the hyperscalers rather than the governments.
Okay, that makes a lot of sense. So finally, how does Africa fit in this picture?
Well, I think the thing is it's a question of timing. It goes back to my earlier point. The hyperscalers are listed companies. They are spending a lot of capex. They have to demonstrate revenues. It's easier for them to demonstrate revenue growth, revenue momentum in the US. They have to look at Africa at a certain point in time because over the medium to long term, that is the driver of global population growth. So today, Africa represents 18 to 20% of the global population, but by 2030, that's going to represent more like 25 to 30% of the global population. On the other hand, the GDP per capita of African countries is substantially lower than GDP per capita of either the US market or indeed Europe as a whole. And so what that means is that with data center capex, I think it's really more a question of timing rather than is it going to happen at all. So I would surmise from that you will start to see a more significant deployment of capex into Africa at some stage in 2027, 2028 and onwards. And it also comes back to the point, just to reiterate, that it's not just about developing revenues and demonstrating revenues for the hyperscalers. It's also about winning the superintelligence race. So, they are building specifically training data centers to help them deliver superintelligence. And they're tending to do that at home in the US market. So, once they are closer to what they believe is superintelligence, then it's easier for them to deploy data centers which are more inference focused. And I think at that stage, you will also start to see more data center capex.
Could you kind of break that down for the audience who haven't been so kind of deeply involved in the AI discussion, kind of like the difference between the AI training and then the AI inference?
Okay, well, without getting too technical.
Yeah, just like on a headline level.
I mean, on a very headline level, a data center which is focused just on training is ultimately all about compute. It tends to be very dense in terms of racks, and that data center will have a whole bunch of data where whether it's OpenAI, whether it's Anthropic, whether it's Gemini, they're basically trying to produce software that will deliver any answer to any question. And I think if you were trying to, there's lots of different definitions of superintelligence, but I think a simple definition that I quite like is is for the AI to deliver a PhD level thesis, i.e. essentially adding to the sum of knowledge, to put it that way, i.e. Essentially producing knowledge which hasn't been produced before. And there's lots of different definitions of it, but for me, I quite like that definition. Okay, so and people say, well, that's too narrow and so forth. But the training data centers that they're trying to produce are quite uniquely focused on delivering sort of superintelligence and that's of that order.
And that's not kind of the use case then for the future African AI data centers.
It's not, but I mean, I think actually if you listen to some of the management teams of the hyperscalers, some of the management teams of the other major AI players, it's not clear to me that they're 100% clear about what they're going to do with the superintelligence. They want to get to AGI, they want to get to the superintelligence, but they're not 100% clear exactly what they're going to do. I mean, I think, AI to me quite clearly can produce a paradigm shift in the world of science, right? It will be able to do amazing things with helping cancer, maybe helping climate change, all sorts of eradication of diseases, hopefully, because ultimately, the compute power will mean that whereas you used to need, I don't know, for whatever example, 10 PhD students, 6 months to come to a conclusion, you might need 2 PhD students in 3 weeks to deliver the same answer, right? So it will help in that regard. But I think broadly, obviously everyone's hoping that it's not predominantly going to be used in the world of military. And suddenly there's going to be drone strikes from X country or Y country against others. So I think that's the broad definition that I would use.
Funny way to put it. Like, I guess there will be that situation. Like, now what?
Now what?
Now
exactly.
Now what?
Exactly.
And I guess will it be one single moment when they know they've crossed the line to the AGI, or is it a bit more blurred?
Well, I mean, once again, I think it comes back to the definition. So if you listen to someone like Anthropic, to the CEO of Anthropic, I think he believes that they as in Anthropic, and I guess in general, that AGI can be achieved in 2026, next year.
Next year.
Yeah. But I think he is at one end of the extreme in terms of his belief. I think most people are talking about maybe 2030, right? So once again, not that far away. But, there's a few people who'll say it's a little bit later than 2030. But people like Dennis Hassibis at Google DeepMind, who is working very hard on Gemini, I think he's talking about 2030.
Okay, makes sense. So going back to Africa, so probably not the AI training facilities will be built here. So is it then the AI inference side of
I'm not ruling that out completely. I'm just saying that if they're spending all that money and you have to justify it, it's much more likely it will be in the US. I think you'll still need training facilities in Africa, because we look at Africa, there's 2,000 different languages on the continent, right? There are vastly different cultures, and there's an awful lot of data mining to be done on this continent. So it's a question of when rather than if. So as I said, I mean, as I look at the numbers and speak to various people and listen and so forth, my sense is that 2027, 2028, you'll start to see more capex in general, because I think at that point in time, not only will the hyperscalers have built out a significant amount of capacity in the US, they'll have a clearer understanding of what they want to do with the AGI, what the AGI may or may not be able to deliver. And I think also importantly, you'll probably find that there's some physical constraints to what they can do in the US, namely power. Right. And, with all of this assumption about, AGI and what it can deliver, there are what I would describe as frictions. Right. And, there are frictions that will mean that it's not a straight line. And one of the key frictions is power infrastructure. So, in the US at the moment, the companies are just trying to deploy capacity as quickly as possible, which is also why, you are seeing companies like CoreWeave take off, because they're doing what's called GPUs as a service. And a lot of their underlying customers are the hyperscalers, because they're basically looking at this and trying to deploy as quickly as possible. But once again, I think that there will be some form of capacity constraints and infrastructure constraints, which will mean that over time, the hyperscalers will have to spread out the capex.
Yeah. And if you think about the AI adoption in the future of Africa, which sectors do you see that could benefit that the most?
Well, I think it will be. I don't see huge differences between the US and Africa and Europe and so forth, in the sense that we're all humans, right? We are all. There's certain things that we like to do, whether it's leisure time, whether it's watching TV or watching sports or whatever, whether it's in the world of our building families, or we care about our health, we want to be educated. So in that sense, I don't see substantial differences. I think you have to look at the structure of countries and the structure of societies, and if clearly the enterprise market in Africa is more nascent than the enterprise market in the US, right? And therefore that means the government sector in Africa is a bigger part of the economy than the government sector in the US. It's not to say that debt to GDP and government spending isn't very high. I'm not looking at it that way. I'm not looking at it purely from the perspective of spending. So, to come back to your point, I don't think that structurally there are huge differences, but I do think one of the key differences is that the enterprise market in Africa is just a little bit more nascent. So I think developers have to have a clearer idea of some of those end markets, and they have to have a good idea of how their market differentiates from other markets. And I think they have to have a good idea of the applications. And it seems to me that we're still in the very early stages of all of the various applications, right? I mean, so you look at a company like OpenAI, for example, and that's completely changed in the last 2 years. 2 years ago it was a not-for-profit. Today it's for-profit. 2 years ago it seemed as if it would be developing its AI software potentially both for enterprise and for consumer. There's now a much bigger tilt towards consumer. So I'm using that as a leading edge example because things are evolving, right? And to that end, even within Africa, we've seen some developers who have built their data centers specifically much more focused for the cloud market rather than for the AI market. And that has had consequences as well. So fundamentally, the point is that the industry is moving very, very fast. The technology is moving very, very fast. So it might not be such a bad thing for Africa to be a little bit behind the US and Europe and the Middle East, because you'll probably find that the return on invested capital that eventually goes into Africa ends up being better, secure, and more stable over the longer term.
Yeah, makes a lot of sense. Speaking about investments, how are they reading? How are the investors reading the situation right now?
Investors in Africa or investors in data centers?
In Africa.
I think that 2 or 3 years ago, there was, and I still think, an awful lot of enthusiasm for AI in Africa. We said at the beginning of the conversation, so there's 20,000 people at this conference, right? Yeah. I think using people's physical feet and showing that they're here is the clearest example of the fact that there's still strong investor interest, right? Yep. And I suspect a lot of that is about learning. A lot of people feel that they need to understand better. They need to better understand the opportunities and the risks. And so I think that's why there's a lot of people here. So I think the investor enthusiasm hasn't waned, fortunately, but I think that investors are being a bit more selective about who they want to work with, what projects that they want to support, and I think they're all being a bit more realistic about the timelines. So obviously one of the big differences between Africa and other parts of the world is that a bigger component of the investor community are DFIs, right? So DFIs are fundamentally here in Africa to try and support infrastructure investment and to narrow the infrastructure gap that Africa has relative to the rest of the world, not just in AI, but also in other certain segments like power, for example. So I think that DFIs, who typically like to write a big check for senior debt, as opposed to providing equity or indeed venture capital, I suspect, they're now thinking through what they need to do to try and accelerate some of that investor spend. So I think to summarize on your question, I think there's still significant investor interest in Africa in data centers. B, because there's been quite a evolution over the last 2 to 3 years, I think investors are a bit more selective as opposed to just unbridled enthusiasm. And then thirdly, I think specifically with respect to the DFIs, I think that there is a bit of more of a thought process going on where traditionally they're happy just to write big senior debt checks, but I think there are more conversations about how they can accelerate projects through equity or through first loss or through other mechanisms.
Exactly. So let's go back to the macro level and global level. To build all this infrastructure and run all this infrastructure requires a lot of power. And I guess the key question is that how that power is then generated. So is the renewable discussion still relevant, even though we've seen a bit of a pendulum swing to the coal and
yes, well,
oil?
Exactly. I mean, I think the thing is that yes, I think that the pendulum has swung away in the short term, away from renewable energy in general. I mean, I think that specifically with respect to AI, the speed to market focus that the hyperscalers have had has meant that in the short term, they just want to deploy. They want to get on and build that infrastructure. So it's not that it doesn't matter to them, but they have for a long time had a strategy of buying carbon credits anyway, right? And therefore the carbon credits would be able to offset whether it's power coming from gas-fired power stations or coal-fired power stations or whatever. But actually what has been happening is that there continues to be an evolution of legislation, which will, particularly from the European Union, which is going to make it harder and harder over time to ignore fossil fuels as being the sole driver of power. So the renewable discussion hasn't gone away. I think the other issue that the renewable discussion has in the short term is a broader discussion about government spending, namely that if you look at the US, you look at the UK, you look at Europe, debt to GDP levels are high. You look at the US, where you do have a strong right-wing government and where there is a focus on drill, baby, drill, right? But I think that, clearly one of the arguments for cutting government spending, it's an easy argument to say net zero targets are unrealistic. Net zero targets that, require huge government subsidies when things like solar and wind have had huge support for a long time. I think that the political discussion has undermined renewables, but the economics, I don't think, has. And what I mean by that is, the cost of solar has fallen by over 90% over the last decade of deploying solar. That is mostly because of increasing capacity coming from China. Okay, the cost of wind has also fallen very dramatically. So the cost of renewables is more competitive than ever. So that's one strong economic argument. Second strong economic argument is that if you look at how the private sector is spending, the private sector is spending both in the US and around the world incrementally much more on renewables. So although there is a noisier, more vociferous discussion against renewables, if you look at what's actually happening, there's still significant investment in renewables. And then thirdly, from the economic standpoint as well, as much as people want to be dismissive about renewables, there is a cost to climate change. So, for example, if you look at the insurance cost of climate change, specifically in Europe, one of the European insurance industries highlighted that in 2024, 45 billion euros was spent on insurance claims for climate change alone in 2024. Now, to put that into context, 10 years ago, that figure was nearer to 10 billion euros, 10 to 15 billion euros. So there's been a 3 to 4-fold increase in the cost of climate change. So that is an economic cost as well. So the point is that I think in terms of the pendulum, the political noise against climate change and net zero has swung against the sector, but it's going to swing back. And in my humble opinion, it's definitely going to swing back, and industry hasn't ignored that, but the noise around it is against. That's mostly because of political leadership.
Yeah, it's become quite kind of comfortable for different right-wing governments, especially, to just like jump on the drill boat for the time being. But I do agree that it's not going to luckily last forever, and we'll soon be back. So what does all that mean for Africa? Like, what opportunities we have here to generate that power?
Well, I think ultimately you look at Africa and there are still, if you exclude hydro and you're therefore looking at wind and solar, the installed capacity of wind and solar is still very limited across Africa. I mean, if you were to look on average, you're certainly talking, excluding hydro, you're certainly talking on average of less than 10 to 20% installed capacity coming from wind and solar, and probably nearer to 10 than 20 in actual fact. You have some countries where things like geothermal help, and that's countries like Kenya. Hydro can be quite a big proportion of installed capacity. In countries like Ghana, it's about 30 to 35%. But that's very much a function of nature. Do you have it there or don't you have it there? So, what that means is that in general, fossil fuels still represent over 50% of installed capacity. So I definitely think that is going to change. And, particularly in countries like South Africa, which, once upon a time, felt that it was fortunate to have lots of coal. South Africa will have to make a painful transition, which it's making now, away from coal. So to come back to your point about opportunities, I think, the companies who are developing AI, namely the hyperscalers, still care deeply about renewable energy, because a data center, the operating cost of a data center, 75 to 80% of the operating cost of a data center is power. With legislation continuing to tighten against fossil fuels, they have to care, right? It's not something that can be ignored. Historically, this has been done mostly through carbon credits, but with that legislation changing, they are having to look at other things, which is precisely why you're hearing more discussion about nuclear, right? Because nuclear is also baseload, and that's what a data center ultimately needs. So, coming back to the point about renewables, I still think there's a huge opportunity in terms of data centers which have renewable capacity. That's the correct direction of travel because it's also cheap, right? And so I think that's why you're going to continue to see those types of deployments going forward.
Good. You mentioned that the price of solar has gone down 90% in the last 10 years. Was that the right?
Yeah, I mean, basically the cost of the leverage cost, the LCOE. Yeah.
So who's leading the development of that technology?
You'd have to say China. I mean, if you look at, and I think actually this is probably one of the things that makes the US nervous. In reality. So if you look at the supply chain of renewables, 70 to 80% of the supply chain is in China, right? So, for the last 30 to 40 years, wars have been fought in the Middle East because of access to power. So if you can imagine on a going forward basis where there's going to be more electric vehicles, which is the key driver of energy, right? i.e. transportation. And, China has 70 to 80% of the supply chain. It's going to make other countries a bit nervous that they control that. So to answer your question, it's basically China. And I think that's part of why it's politics again. You're hearing those types of negative noises because those countries don't want to be vulnerable.
Yes, I see. Okay. What worries you about Africa's digital future?
Oh, that's a broad question. Well, I think the thing is that Africa's a very tough market. It's a tough market, A, because the cost of capital is high, right? B, because, and one of the reasons why the cost of capital is high to some degree is that it does take longer to execute on infrastructure, right? And those two factors haven't changed much over the last, 5 years. And so I think that, that's not to say that you don't have strong population growth. That's not to say you don't have strong GDP prospects. I mean, to throw some numbers at you, if you were to look at the average GDP growth of Ghana, for example, over the last 40 years, not the last 5 years, not the last 10 years, but the last 40 years, it's been 5%. So 5% on average for 40 years is fantastic. If you were to look at the numbers for Kenya, for South Africa, for Nigeria, not vastly different. You're still talking about 4% on average for 40 years. So those are, the growth rates are fantastic. But the cost of capital is still high. So, we need help from the DFIs to be creative to help bring the cost of capital down. And I think that, it's always good to see them at these conferences. It's good to engage with them. But, I think that, now's the time for the DFIs to be creative and to listen and to look at their mandates fundamentally to decide if, their mandates need to be reviewed. Now, it's not to say that the DFIs don't have a good reason to be frustrated with African governments and African SOEs because historically they have let down the DFIs by not paying on time, by having arrears. But I think that engaging with governments, engaging with the private sector continues to be the right way and, trying to be creative as opposed to complaining.
Yeah, fair enough. So what makes you optimistic?
Well, I think I'd go back to my earlier points. I think that, I think I'd not only highlight the strong growth that we've seen over the last 40 years, I'd highlight strong population growth rates, whereas the rest of the world is moribund. Fertility rates across Africa are 3, 4, 5, depending on which country you're talking about, whereas in Europe, you're talking about 1.5, right? So, population growth is strong.
In Finland, even less.
Okay, even less in Finland. And I think you have people who are enthusiastic. There's a desire to learn. There's a desire to better oneself. Everyone that I've worked with in Ghana, for example, is keen to take the country forward, keen to be part of this AI revolution. So I think those are the 2 or 3 things that make me optimistic.
Cool. Finally, why should we care about African data centers?
This is always your last question, isn't it? I think that there's a couple of key points there. Number one, it remains a huge opportunity. It remains a huge opportunity because just on the macro numbers, less than 1 to 2% of the world's data centers are on the African continent as compared to that population number of nearly 20%. So there's still a huge dichotomy there. The issue is timing. The issue is working with the right partners. But there's a huge opportunity there. Secondly, the AI revolution is evolving all the time. And, Africa is already left behind in terms of its infrastructure gap in lots of different sectors. So I think it's important and fundamental that we're not left behind in this next great revolution.
Thank you, James. Thank you for the analysis. Thank you for the numbers, especially.
Sorry, too many numbers maybe, but there you go.
No. You're the numbers guy, so I trust you on that. Hey, pleasure having you on.
Thank you. Thank you for having me.
Let's continue to the event.
Absolutely.
Cheers.
Cheers.
This podcast is part of the Data Governance in Africa initiative, helping the African Union shape data policies, enable cross-border data flows, and build secure, sustainable digital infrastructure. Funded by the EU and 5 member states, it supports a unified digital market in Africa.